And for more on fintech, I'm joined by Henry Arslanian, Chairman of Fintech Association of Hong Kong, and David Chow, General Manager and Partner of Global Business Services at IBM Hong Kong. Thank you so much for joining me today. And I want to kick off this conversation with a bit of an overview of the state of play in the fintech sector right now. I remember a few years ago, all the fintech startups used to come out and say, we're going to kill the banks are going to be over because of our technology. And that hasn't quite panned out, has it? We've seen a lot of these fintechs work with the banks, even get acquired by the banks. So where are we at right now? Has fintech lived up to its hype? Henry, let me start with you.
Sure, I think, the fintech ecosystem has changed greatly over the last 2-3 years, and we definitely moved from an era of competition to one of cooperation. And we've seen this in various verticals of the fintech industry. And for example, a lot of them actually has been catalyzed by some of the regulatory changes. For example, here in Hong Kong, with the enactment of the virtual banks, that has given a second life to a lot of these fintech startups who are having difficulty plugging inside of the traditional banks, often due to legacy issues and other considerations. And now a lot of the virtual banks and other developments going on are really boosting this ecosystem from that perspective. But also the ecosystem has grown organically quite a lot. For example, at the Fintech Association, 3 years ago, we were a couple of guys together launching this association. And now we have more than 400 different corporate members representing over 1,500 members. So a lot of growth organically as well.
And David, how do you assess the fintech state of play right now?
Yeah, so when we look at the market as a whole, right, we work with a lot of banks, and we actually do a study every few years, and we survey all the CIOs, CXOs about what's the state of play. And a few years ago, the number one threat were these startups. But today, most of us see the number one threat are not the startup, but the other gorillas in the room. Right? So I think what we find is that a lot of these texts about how do they, and we call it this incumbent strikes back, right? All these incumbent banks about leveraging fintech technologies to really take the next level.
So let's dig into that a bit more then, David. You talked about the gorillas in the room. We spoke a bit about the startups, of course, talking about taking on the banks, but actually you have seen some of the large, particularly US tech giants jump into this fintech space. So are they actually the bigger threat to some of the established financial services right now?
I believe so. I mean, I think there's definitely the virtual bank that's what has been talked about. But I think within other kind of technologies, and especially if you talk about the Hong Kong MA's action on open API, right, and virtual banks, it's really concept is really to open up the whole ecosystem to allow different entrants of different industry. But it also offers a lot of opportunity, I would say, for a lot of the banks. So how do they collaborate with each other? And we see a lot more is this cross-industry types of interaction that's been happening. How do we create new products and services? I think at the end, I think the consumer benefits, and that's what really matters.
And Henry, for you, how do you see big tech approaching fintech? What approach are they taking? And actually, how big a threat are they posing to the established financial players?
Absolutely. If you look 2 years ago, like you said, everybody thought if fintech was going to come and disrupt the banks. But actually what happened was actually the real game-changing disruption came from the large technology firms. So it was really a tech fin, not fintech. And actually what's been really interesting for us is that the real innovation went from a tech fin perspective happened not only in Silicon Valley, but really happened here in Asia and China in particular. And for many banks around the world, when they want to see what is the disruption coming ahead, or what can really disrupt their business, they don't look at Silicon Valley now, but they rather look at China and Asia.
And when you look at the way banks and other financial service players have approached fintech, what are they doing now? Because I remember, again, a few years ago, they just they dismissed that little fintech startup that's popping up. They're not that big a threat. Then they were like, oh, we should take this seriously. We need to revolutionize our tech in our bank. And then actually they started to do projects like internal incubators, maybe even acquisitions, small. But it felt to me like it was just throw everything at the wall and see what sticks kind of approach. So how has that changed, if at all?
Absolutely. Over the last couple of years, we've seen most banks hire chief innovation officers, launch innovation labs, do hackathons. The reality is that the impact that those have had is quite mitigated. For example, many of these were used for marketing purposes, PR purposes. It looked good in press releases or when a CEO gave a speech. But the material impact that they've had within the organization, in many cases, has been minimal. However, the exception to these have been banks where at the top senior management level, from a CEO down, there's been really a push and a leading by example to really try to transform the organization, where CEOs have been telling their staff, you're not working at a bank anymore, you're working at a tech firm. And if you're not happy, the door is there, you can leave. So in those organizations, we've seen really material impact, but for many of those, it's been often a smoke and mirrors.
And David, for you, IBM, of course, works with a lot of large financial players. Is that an experience that you've seen as well?
Yeah, I would agree with that. I think what we see a lot, though, is there is this whole culture of digital banking. right? And I think it's there to stay. I think it was very gimmicky, I would say, a few years ago, but I think you actually see an output of that. So some of the clients we work with, they have really transformed their whole culture, this whole agile development, right? We're looking at what's the next feature, what the next capabilities they have to offer. So we're actually seeing that. So some of the clients we work with, for example, Hang Seng Bank here locally, right? They invested a lot. We work with them to do this whole conversational banking. And you see some of the advertising that's happening in the marketplace here about how to actually do banking in different ways. It's not about going to the teller or going to the actual branch, but actually be able to do a lot of the transaction and using chatbot and virtual assistant technologies. It's not just about Q&A, but actually do real work on those banks.
So Henry, just on that technology point, what technologies do you see as being important right now for these financial services institutions?
No, absolutely. A couple of technologies I'm watching right now. One of them is voice as a user interface. And over the last couple of years, all every financial institution focused on being mobile first. But actually, one of the big trends we're seeing right now is the use of voice as a user interface. For example, right now in the United States, 20% of households have some kind of Google Home or Amazon Echo at home. And actually, we may move a transition from mobile to actually voice. And this is going to be a very dramatic transformation for financial institutions, not only because they have to build solutions for these, but also it changes the relationship. For example, today, if I want to buy enroll to a credit card, I can Google and find the best credit cards I want to go. If I want to use Alexa, I have to say, Alexa, what is the best credit card out there? So the power shifts from the consumer to Alexa. And this is what financial institutions, branding and marketing will be very important over the next couple of years, because their goal is that the consumer says, I want to get the HSBC credit card or Citibank credit card. And that's why I think a lot of banks need to improve how they brand themselves in this era of voice as a user interface.
Interesting. And David, for you, with working with financial institutions, what technologies are you seeing perhaps being implemented the most or the most interest of being implemented?
I think there's a transformation, from inside out, I would say. So if you look at the inside of a bank today, old days it was all very monolithic, right? You have a very core banking application that can do certain products. But you see the innovations happening and the challenges you see from everywhere else. These banks have to be very agile. So they've been kind of reformatting their whole internal organization to use leverage stuff like open API, microservices, really separating between the products from the technology, so that they actually can kind of mix and match, kind of like Lego blocks, that they can put together new products technology much faster than before. And I see the banks that are able to do that, right? They are in good position to compete with the virtual banks. And those who are not doing that or slow to adopt, I think they're going to they'll be hurting.
Now, again, speaking to executives at banks a few years back, there was one word that they always used to say to me: blockchain. This was supposed to revolutionize banking. It was supposed to revolutionize their organizations. But we're still at a stage, I feel, where there's just a lot of experimentation going on still. We are not seeing, huge wide-scale adoption of this technology within banks and within other financial services institutions. So, Henry, again, is this a technology that's failed to live up to the hype? Where are we at when it comes to blockchain and financial services?
Absolutely, Arjun. I think we have to really separate blockchain technology and digital assets. You're right. Actually, when we looked a couple of years ago, the entrance of blockchain within financial institutions has happened slower than many people expected it. And there's a couple of reasons for it. One of them is actually technological or scalability issues. But the other one is actually for many banks, blockchain is a cost reduction tool, which often doesn't get the priority when it comes to the budgeting cycle. On the other hand, where we're seeing things move forward is when it comes to digital assets and crypto offerings. For example, many banks are not only investing in crypto companies, many of them are launching custody solutions or other like solutions, because often in many cases, that's a P&L driver. And in any financial institution, that often takes priority over cost reduction. So very optimistic on the impact, but I think really we'll see different sectors.
And I want to ask you a bit about this as well, David, because obviously IBM has a bigger business in blockchain. So how are banks approaching this technology? Is there a difference to, say, 3 years ago?
Yeah. So I think blockchain, like you said, I think was a lot of hype, right? I would say it was a technology looking for a solution or looking for a use case for many years. But I think what we have, as kind of the dust settle, I think where we do see blockchain being used is in use cases where transparency is required, multiple parties interactions required. Those are a real use case where blockchain actually makes value. So for example, right, one thing we did was WeTrade. WeTrade is an organization that we work with. And what they did was they put together this 14 banks in a consortium, and then whatever connect between buyer and sellers in a trade finance scenario. Because if you look at the trade finance of today, it's a normal process. There's a lot of paperwork, it's a long transaction, but having that ability to connect those two sides and the corresponding banks allows that to happen much faster. So that's a real use case for trade finance and then also for banks. Right? But other times what we have seen is that people just want to use the word blockchain to justify what their investments are. And I think those are ones that sort of has a great PR moment, but they don't really actually have real transactions.
And I want to pick up a point that Henry said and put it to you as well, David, and that is you're seeing these large financial institutions also starting to dabble in crypto assets as well. But I remember just a few years ago, again, they didn't want to touch Bitcoin with a barge pole. They want to get anywhere near this stuff. So how has the thinking changed within the larger financial institutions towards these crypto assets?
So I think one use case we have found is we did this thing in Singapore where we actually ran a blockchain network to allow the people to do wire transfers. So basically allow you on one side of the house to do the currency, convert to a cryptocurrency, allows it for the other side to do the remittance on the other side. I think having that actually take away a lot of the transactional costs. So that's one area I think people are looking into. Because not so much about cryptocurrency in itself, but how is it actually being applied so that we can actually reduce the transaction costs in the middle.
But we are seeing some of these organizations jump into perhaps the trading aspect as well when you look at the likes of Goldman and Fidelity as well. So do you expect to see more companies getting into the crypto asset trading side too?
Absolutely. I think one of the biggest drivers right now in the broader crypto ecosystem, actually not startups, but actually a lot of traditional financial institutions. And one of the big drivers of pushing this is actually regulatory clarity. Over the last 2 years, we've seen really a lot of regulations come and clarify a bit of the space. For example, today, according to Cambridge University, only 5% of regulators do not have somebody working on crypto. And really across the world, we've seen now many regulators provide clarity, including here in Hong Kong. And this has given kind of a lot of financial institutions the level of comfort needed to dabble into the space.
I do want to jump into regulation momentarily, but I first want to tackle a big topic in this area, and that's this Facebook Libra project as well, because it's been getting a lot of attention, and it was supposed to bring crypto mainstream. But of course, what you have seen over the past few weeks is a number of partners fall out of the project. So what does that mean for the broader crypto sector, these crypto asset sector? Is this a big setback, do you feel, Henry?
Well, I think Libra is by far one of the biggest experiments we have in recent modern financial history. I think it's going to be, the impact it's going to have could be quite remarkable. I think one thing that's important is in many developed markets, the need for Libra is maybe not that urgent. For example, if you look at Canada, or the US, or Australia, payments within the country may not be perfect, but they're okay. Where I think there's a big need for Libra is in emerging markets and in areas where there's a lot of remittances. For example, today, the average cost of remittance around the world is between 5 to 7%. In many countries, it goes over 15%. And those are areas where Libra can really make a difference. It make actually sending money as easy as sending an email or sending a WhatsApp. And that's a big transformation, not only for financial markets, but also for society as a whole.
And David, Henry mentioned regulation. Let's talk regulation now, because there was a sense that some of the global regulators were behind the curve when it came to regulating fintech developments. Where are they now? How do you feel regulators are responding to developments with financial technologies?
Yeah. I think they're actually a big advocate of it now. I think they actually realize that in order to transform the whole financial ecosystem in this new century, you really need to embrace a lot of these new technologies. But I think the other part of the regulator function is really about making it safe and secure to do that. So I think one thing what they have done right is, in Hong Kong right now, they have launched the phase 1 and 2 of the Open API standard. Right? They actually force a lot of the banks to actually come up and express all the capabilities and information products through these APIs. But what it does offer is create the opportunities for the other industry to participate. For example, if you want to buy a car, you want to get a loan, right? You can actually tap into these different products that all the other banks given. So at the end, it actually becomes this aggregator business that actually benefit the consumers. But yet, they give another channel for the banks to sell and to channel their products as well.
And Henry, from your point of view, when you look at the global regulatory framework, I mean, are regulators right now helping or hindering fintech?
Well, I think often regulators do not get the credit they deserve for the work they've been doing in the space. I often say on a personal level, I would say the average regulator that I speak with is way more knowledgeable on fintech or digital assets than the average financial services professional. For many of them, not only there's a lot of cooperation now between regulators on the fintech side, but in many areas now, they're really at the cutting edge in many verticals. Digital assets is one of them. And I think that what's going to be interesting now is seeing clarity in other verticals. One of them is, often we don't talk about, but it's tax clarity. Last week, for example, the US IRS issued for the first time tax guidance on digital assets. And this is something that is very good that we have fintech regulations. We also need tax regulations. I'm very happy to see developments in that space as well.
So I guess still the point here is there's lots of work to be done on the regulatory front, and that's likely going to continue. On that point, we're going to wrap it up here. Henry, David, thank you so much for joining me today.
Thanks for having us.
So much.